Okay, and then we can start. Okay, good afternoon, guys. Good evening to some. I would like to welcome you and thank you very much for attending today's webinar. It is the Monday Geometric Live webinar. Today is the 19th of September 2016. Okay, and I've got some requests already with regards to pairs from, let me just check it again. We've got USD CAD, we have got USD JPY, we've got the GU, GBP USD, and we've also got NZD USD to look up to for all these pairs. From Veronica, we've got the GBP JPY. That's quite a pair as well to look at because the volatility level is quite high in GBP JPY. GBP CHF, that's also quite a good one. Now, for some reason, we have got CHF to be high in volatility as well in terms of, as of today, okay, combined with the USD or the GBP. So that's quite a pair to choose from as well. Now, you've mentioned SDJPY, Veronica. Could you confirm? Is that Singapore dollar versus JPY, or you've got something else? I'm not sure what that is. So confirm that one. USD, yes, I got it. I got your message there. All right, so USD JPY. All right, perfect. Okay, good. So we've got these pairs to look at. Now, before I look at all these pairs, I would like firstly to mention about things that we need to look out this week. This week, if you go onto your economic calendar, I mean, you've got the FOMC, you've got various events to look out for. So these things, these events would then impact not only the movement, the volatility, as well as the liquidity of that particular pair. Okay, but each pair would actually move, as I've mentioned many times before, they all have their own personality type. So some pairs like Euro JPY, for example, as mentioned before, they work best on Thursdays, certain time of the day. So let's focus on some pairs, but I would like to pass you guys more information on when would the best timing be or highest in terms of volatility be for these pairs as well. I'll send that separately in the email and I'll give you some ideas on the pairs that we are talking about today. Okay, now before we go on to the pairs, we go on to Euro USD first, okay, because this is the pair with the highest liquidity amongst all other pairs. It's the largest, I mean in terms of volume as well, the largest pair traded in the Forex market. So let's go on to this pair as well, okay? Go into this pair before we go into the other ones. All right, so I'll just clear up everything here. Let's start off with a 1 hour chart for the Euro USD, okay? Just give you a bit of an idea there. Now, we are looking at the Euro USD on a 1 hour chart. Before anything else, I would look at the price just at a glance, and I look at looking at the price of 1.1174, and I see that this last candle is on the upside, let's say. I mean, a lot of you guys would say, oh, okay, Euro USD is going up. I wouldn't agree I will agree partially that it's going up, but we cannot really say that a pair is going up if we have not really got the overall picture based on different time frames, okay? So based on the 1 hour, that we can regard that as a short-term sort of trade, I can say that yes, we are looking at some bullish candles, but then the price is at 1.1174. Now, when you look at the last two digits, 74 is really close to the 80 psychological level. Now 80, 74 goes up to 75, 76 and so on and so forth, and 80 is a psychological level where prices could easily turn around very close to this 80 psych number. Within 10 pips of 80 it might turn down. So it's, to me as a trader, it's not a good time-wise, especially based on price action, to enter a long at this stage would be very, very risky. Okay, because if you would like to know whether or not prices would then go up much more, then you would need to wait for prices to go past or go through the 80 psychological number, meaning if it goes 1.1180 and then it goes up to 81, 82 and then 90, at least 10 pips above 80 would be 90 area, then you have a better idea to look at the dominance of the bulls or the buyers are dominating. then you've got a better confidence, and then you look at the next psychological level, and then you could plan further. Okay, so here we're looking at loads of resistance here, and then a big fall, okay, of Euro USD on the 1 hour chart. Now in terms of trend, let me just firstly zoom out. Now, you can see that majority of candles are under all three moving averages. Now, for those who are new, I welcome you and would like to mention to you that every time that we're on a live webinar or anytime I'm conducting a course, if it is on the chart, I usually apply three moving averages, and they are the exponential moving averages. That the three lines that you see. The lightest color that you can see is your 50 moving average, exponential moving average. Then the second one, what do you call it, the blue one, not the dark blue one. This one here, the middle line, is the 100 exponential moving average, as well as the 200 exponential moving average. Okay, so I'm not using the exponential moving averages as a, based on crosses to enter or to exit, not at all. I only use these moving averages to determine the trend. So now we are starting it with the 1 hour chart. And on the 1 hour chart, we have got majority of candles. As you can see, majority of candles are under all three lines. When they're under all three lines, they're giving you the hint of a downward bias or a downtrend. If I zoom in a little bit, just to make sure what I'm saying, you've got majority of strongish candles as well. The dominance are by the sellers as well here with the Euro USD on the 1 hour chart. Okay, and you've got some rebound going on at the moment. Okay, but they are all still under all three lines. Okay, so here it's still under. We've got downtrend dominating the Euro USD at the moment, but it's not a good time to enter a long as well, because we have got, if you're entering a long, you need to ask yourself what's the dominant trend. The dominant trend on the 1 hour chart here looks like it's a downtrend, so it's probably best for traders to ride the trend to the downside, because this is a downtrend. Okay, I think I've got some questions coming up. Yes, Adam, you're asking whether it's close or high. Now, all the EMAs are applied on close. Yeah, they're all on close. Okay, it's all on close. Thanks. Okay, so we have got now on the 1 hour chart, we could regard this as a short-term sort of time frame, okay? And then the 4 hour is your medium term, and your daily chart is your long term. So what I would like to do next is to go on to the 4 hour chart and look at whether or not the candles are still under all three lines, or have they gone above the three lines. Okay, so I will move on to the 4 hour chart and look at the majority of candles. Majority of candles as of now, they are still under the three lines, which give us a hint that it's still downward bias, still downward trend, downtrend dominating. Okay, the sellers are dominating. All right. Yes, we do have some form of rebound going on the 4 hour chart, but look at the size of the candle. Candles are not powerful, elongated, or long bullish candle. They're just, small candles. Small candles meaning not that much of a buying power dominating the market at the moment for the Euro USD 4 hour chart. Now we go next to the daily chart. Now daily chart gives you a little bit of a different story. Why? Because we do have it under all three lines, but the thing is that look at these three lines. The way the three lines move, they are moving sideways, they are moving horizontally. When the three lines are moving horizontally as opposed to the 1 hour chart, look at how it moved in the 1 hour chart. In the 1 hour chart, it's moving downwards, it's separated from each other, it didn't actually touch each other, and it's pointing downwards. The steeper it points downwards with all three lines apart, the stronger the trend is. Okay, now here on the daily chart or long-term chart, the trend is a little uncertain. Why? Because it's called a 3 o'clock angle. 3 o'clock angle meaning that look at this majority look at the majority of candles, yeah? Look at this majority of candles. Now, this is the problem. The problem with the long-term chart, we cannot rely so much on the trend based on the long-term chart. Why? Because of this. Look at all this movement here. look at all this movement here, it's actually sideways. Okay, this is a giant sideways trend. It's called a 3 o'clock angle. The majority of candles are trading on a 3 o'clock angle, meaning if you look at your watch, you see the 3 o'clock hand, it's all sideways horizontally. That means uncertainty. That means there's a balance in the market between the buyers and the sellers, and it's not going up or down as yet, hasn't broken out yet. So this angle is an uncertain angle for the long term. Okay, so if you are trying to trade for the long term, it's quite risky, because how are we supposed to trade the long term if our view for the long term is not clear? We don't know the direction for the long term yet. So it's best for us to trade along the time frame that has the clearest picture for us. Okay, and that is best on the shorter time frame up to the 4 hour. Okay, best would be 1 hour, but we haven't checked on the 15 minutes or even the 5 minutes to look at whether or not we've got a clearer picture there. Okay, right, I'm just going to look at questions. Give me a second, guys. Yes, all right. Okay, no questions, brilliant. Okay, now we're looking at Euro USD now on the daily chart. I guess you guys have got an idea on determining trend at the moment. Okay, I just want to go on to a short time frame before we go on to the USD CAD, USD JPY, things like that. Okay, erase all drawing. Let's go into the 5 minutes chart first. Okay, this would give you an idea of what's happening now with the Euro USD in terms of trend as well, and the dominance, you know, whether it's a correction or not. Let me just check whether I am indeed online. Okay, good. So here, as you can see, we've got a rise up of prices above all three lines. But the thing is, the three lines are sort of entangled. They're not clear, not giving you a clear picture that it's definitely on the upside or downside, but you've got candles above all three lines. Okay, now hence the reason we're looking at a bit of corrective move here. Okay, so we are looking at a downward sort of move. Now this is a corrective move for the 5 minute chart, meaning that it has definitely gone upwards, but this is coming down. Okay, why is it coming down? It's based on the geometric pattern itself. We could easily spot an A, B, C, D on this chart. How? We look at it this way. You've got an upward move here on AB, correct? Now we'll double click that, bring that across, and we could see that that's where it could potentially, how do you call that, rebound. Okay, so that is probably where you could take profit if you were buying on a shortest term or on the 5 minute chart. So I'll just draw that pattern now. We've got an ABCD pattern. Okay, now that is just an ABCD pattern as of now. We haven't convert that into a geometric pattern as yet. Okay, so that is the first option to actually predict or forecast the move where it could potentially reach, is to get your AB equals CD, like what I did earlier on. I've got my AB drawn out, and I just take that to the C to D, and that would give me an idea of where prices would land. Okay, that's the first option. Second option is to take your A to B and look at where the C lands, okay, or has landed. Now the C landed at 61.8, quite on the dot, which is a good sign. Now that means 1.618 would be the extension. So you pull that from this move down, that's the B to C, and you look at this angle here. All right, but the thing is, it didn't actually quite reach that far. Okay, and there may be reasons for that, because this gives me a signal that there are more dominance by the sellers, because it didn't actually really reach that high. It started to go on a sell sooner, so that is a good sign for us trading the 1 hour chart or the 4 hour chart, looking at potential selling opportunities. Okay, so here we go. Now as I've mentioned earlier on, you've got the three lines, and most candles are under all three lines. So that is definitely giving us some form of downward or bearish biasness for the Euro USD. Okay, now again for the Euro USD, the other thing to watch out for if we go on to the 1 hour chart is you've got a sort of cup-like pattern going on here on the 1 hour chart. Okay, see that is a cup-like pattern here. Okay, so let's say that is the mouth of the cup around here. Why? Because we've got a lot of a sideways trend around this way, so that gives us an idea that the mouth of the cup could be here, because you see that area of support quite similar to this area of support. Now what usually happens in a cup and handle pattern is the formation of the handle. Okay, now the handle hasn't formed because the handle will form a zigzag or channel up movement. So here what I am guessing is that you've got a upward move to the extent of 50% here. Okay, that may be a corrective move for the Euro USD. So there may be some expectation to the upside for the Euro USD, so we need to be very, very careful. Okay, so you got a zigzag upwards. Now I would say that it's best for us to wait till prices go above 1.1180 area, because that is where the psychological level is for the Euro USD. Okay, we're looking at a 1 hour chart. So above 1180 and above, then you've got better confidence. Now it's only at 1.1174. It's best to wait till prices go towards 1.1180, pierces through 1.1180 and continues its journey above 1190, and then we would then be able to gauge upward momentum or movement. Okay, at this moment it's just too early to either put a buy or think that it is definitely going to go up. There is no definite here, it's probability. Okay, so I would look into the patterns at this moment and see it may be a potential to the upside. Okay, but the other thing I want to point out for those trading the Euro USD is this. Let me just clear out this first. Let's zoom in very quickly for the Euro USD. Okay, I want you to always look left as the price goes up. Okay, prices are going up slowly, not that strongly, but slowly, making a sort of corrective move. I want you to zoom in and look left. Look left and look at whether or not you find any significant resistant area. You do have resistant area here, so it's best to mark up a zone, a support resistance zone as well. Okay, I will just move this. Okay, so we can always use this one here because this is a resistance zone here. Okay, close to the price, and we've got area here as well. Okay, so that's a zone. We mark with the body and the tail, and we've got a zone, and you can see that we've got some resistance zone here. Going to the 4 hour chart gives you a better idea. You've marked that. That's a nice support and nice resistant area as well. So this is definitely a zone to look out for, even for the 4 hour chart. But let's focus back onto the 1 hour chart. And this is basically what's going on with the Euro USD. Prices needs to go above this zone area, above 1183. Okay, 1.1183 and above. Like I've mentioned, it needs to go above the 90 as well in order for us to get good strength. But the problem is this: as it does go above, let's say it does go above that zone 1.1182, you've got three challenges here: the 50, the 100, and 200 as well. So as a summary, Euro USD has got some challenges to overcome if it wants to go up. If it wants to go up, the problem is you've got challenges that would push it downwards. So in looking at the 1 hour chart, what is dominating the scenario of the trend is downtrend for Euro USD. But we cannot just enter a trade at this moment of time. It's not ideal. It's probably best for us to look at whether or not prices will pierce through this zone. If it does pierce through this zone with a bullish long candle piercing through this zone, then the trend might change to the upside. If not, the downside would actually continue. Okay, I hope that's clear for the Euro USD, guys. Any questions at all for the Euro USD? I mean, I'm not looking into the daily chart or the 4 hour chart because it's not very clear the way three moving averages work as well. It's not giving me clear trend directions as opposed to the 1 hour. So 1 hour, 5 minutes are giving me clearer, better picture, but not the 4 hour and daily, so I put them aside. I wouldn't want to trade based on time frames that are not clear, especially with regards to the trend. Okay, all right, so shall we move on at this moment of time with USD JPY, I think. Okay, before we go on to the USD CAD, we go to USD JPY first. The reason for that is USD JPY is one of the majors. I like to touch on majors first because they are the highest, traded pair in terms of liquidity and volume and traded the most. We've got four major pairs. We've got the Euro USD, USD JPY, USD CHF, and GBP USD. Okay, so these are pairs I would like to cover first before we cover the exotics or the other pairs. All right, the crosses. All right, so yes, let's look at USD JPY. No questions on the how do you call that, the Euro USD earlier on, so we'll move on there. But I would like to start off with a clean chart always. So let's take off all the take the lines out and leave the three moving averages or indicators on. Okay, start off with the 1 hour chart, guys. 1 hour chart, what is going on? Now, the thing is that, yes, we've got a lot of fundamentals going on, we've got the FOMC playing up, but again, I would like you guys to focus on biggest event. You've got presidential election for the dollar to perform. The dollar needs to perform well before the elections. Okay, that usually is the case scenario. But it doesn't mean that, okay, it'll go up, loads and loads just before, because we've got Trump coming into the picture or Hillary coming into the picture later on. So that would be an after effect. Okay, who gets elected would be an after effect. The market will react to the after effect of a president in place. But before that, usually it's positiveness because it's before the elections. Okay, a lot of things need to be done before the elections. I mean, they would attract investors as well. So a lot of things needs to be attractive enough. Okay, all right. So here we have got, now just look at this at a glance. At a glance, USD JPY on the 1 hour chart, we could see that prices are under the three lines, right? Now, giving us some idea of a downward sort of momentum, but we could see the price. Look at prices on the right, 101.66. Okay. Now, if you would like more confirmation or more, I would say, more confidence in thinking that prices will fall more, then you would need to look at the level 65.66, 0.65. It needs to go lower. These numbers here needs to go lower under the 50s cycle number. So only after you see prices go lower under the 101.50 area going towards 101.40, only then would it give us more confidence in a downward momentum for the USD JPY. This is one. Okay, number one, price action. Number two, you look left. Look at the areas that would actually pose as support. Look at it. Okay, we go on to the 4 hour chart and we look at it from a bigger picture perspective. Okay, I'm going to mark that for you. Look to the left, closest to where prices are now. Look at support area, support area, support area. Okay, significant, I would say reasonable support areas that you need to pay attention to. Okay, then you've got prices just penetrating through or piercing through all three lines and made a very big, large upward move here as well. Okay, then you've got some support here too. All right, so even though price is coming down, you need to look left and look at whether or not this time around, some time ago, did prices go up or created support zones at this level. Okay, now we are at the 101.66 area. Okay, yes, it's going down. Yes, we have seen that prices are under all three moving averages. That's good to notice that. But what we need to do then is we'll zoom in a little bit. okay, and compare. You've got 1 hour, okay, you've got candles under all three lines, but we've got lines separated, okay, the three moving averages. But look at the angle of these three lines. This angle of three lines is not giving me that much of a confident angle. You know, these are good angles. Let's say these are very nice angles. I mean, that the way the steeper it is to the downside, the stronger the downward trend is, okay? But these three lines are quite close to a sideway, you know, it's just beginning to come low. Of course, it's a lagging indicator, but I see that we've got strength here, okay? We do have some strength here, but again, based on price, it's not really giving me good indication as yet. I'm not 100% convinced, okay, at the moment. So let's just do something here. Based on the 1 hour chart, let's look at levels it created support, okay? I would look into significant areas of support. Let's say this area here. Look at how much that body they created an upward move, and it zigzagged right across, and this has got strength to the upside, okay? Based on this area, the lowest wick or longest wick I can find is based on this candle here. So what I'll do next is I'll draw the second line. Now remember, when you draw a support resistant line, make sure it's not a single line. It's better to create a support resistance zone. I've mentioned that many times before, so I will always remind you that. Now this is based on this move here, okay? Now what about this move here? This has created support all the way up to that angle there, and it's highly significant too. So let's use the body of that middle candle there as one line, and then the longest wick that we could see another line. There you go. Now I've created a support resistance zone. Okay, why I say it's also a resistance, it could potentially be a resistance zone as well, because support turns to resistance, resistance turns to support. Now take a look at this. I have created 4 lines that have formed the support resistance zone. Okay, now keep looking left and look at whether or not you've got a longish candle piercing through these 4 lines. If it does, it's a good sign. Then you've got a longish candle. You've also got a bearish candle piercing through. You've got other candles piercing through as well. And then you've got resistance here. Okay, you've got loads of support here, loads of support here. Okay, what does that tell us? That tells us that we've got significant support here, and this is a stronger support zone than it is a resistance zone. But again, that does not mean that it will always be a support zone. Okay, it could even turn to how do you call that, a bearish zone once you find a longish candle. What does this 4 line mean? Only if you find a longish candle piercing through these 4 lines, only then you've got dominance by the sellers. Okay, so these 4 lines that I've drawn here, not only it is a support resistance zone, but also a how do you call that, a border to give you an idea whether or not the USD versus the yen is on the bearish territory here or bullish territory above. But the bullish territory should be even more confident if it's above all 3 lines. Okay, so let's look at what's happening. First, you look at the price, it needs to be under 50. Okay, but keep these zones intact. Okay, because these zones are really important. So the zone is made up of 101.58, and then the last line below is 101.41. They all work very nicely with psychological levels as well. So I wouldn't want to do any sort of trading until I see prices bouncing up above this green line here, 101.60 and above, maybe 80 and above. Then I've got some strength, okay, to the upside. But I would like it to be I would like myself to enter a short trade only if prices or candles are under the 101.41 or 101.42 area and below. Then I've got more biasness to the downside. This is for USD JPY. Okay, now pattern wise, geometric pattern wise, or just pattern first. you could see that prices from here fell, yeah, made a corrective move right at the area. It looked like it got trapped here. It couldn't go up further at this three lines area. So what we do next is we pull a Fibonacci from there to that point down here, and we just want to look at where did it correct itself. Corrected itself at 38.2. Okay, so 38.2, it's good. It's a minimum a corrective at a C point that we usually use. If it's at 23 or something like that, it's not enough for me to use it as an ABCD or see it as an ABCD formation. Okay, so let's say I will just draw up an ABCD at the moment. I've got A to B right there. Correct? So if AB equals CD, I'll just double click that, move that all the way down here, which gives me an idea that if at all the bears are dominating, it could well go to that level here. Okay, 100.88. Right? Now we also have to do the B to C leg. So we've got B to C going on like that. Now, where should I be looking at ideal entry point? We'll convert this ABCD pattern into a geometric pattern. And then we find that cross. That cross gives us an idea of where ideally you could be entering, okay? But you are the trader, so you would need to take responsibility in adjusting that price here to the psychological level. Take a look at your equity as well, do some calculation in terms of lot sizing and lot positioning in order for you to enter that trade, if at all you're looking at it going your way. Now here, for example, we've got dominance, so prices has gone under that level there, and so this is giving me an idea or a hint that the bears are dominating for this one here. For those who have actually entered at this area here, you can look at this area here ideally as a take profit zone. But again, for you guys as traders, please do adjust that level there. Even though it's on the dot here at 188, you need to adjust that to psychological level. So it's 10 pips above the 80 side number, giving you a number at 100.90 as an ideal area, as opposed to just following what you see. Okay, it needs to be adjusted. You need to take responsibility to adjust that and be very aware of your margin level as well when you want to take positions like that. Okay, so this is what's going on for the USD JPY. We're looking at a 4-hour chart. This is giving us an idea of a bearish sort of signal that is probable. Okay, from looking at trend is doing the downside move at the moment on the 4-hour chart. So let's look. Okay, even though I find that you know, we've got what I've mentioned earlier on about the presidential election, we've got you know, positivity expected for the US dollar, but again, we need to match that up. Okay, match that up between fundamentals and technicals. Okay, perhaps it's only correction at the moment, but from what we see, there's a lot of obstacles for the dollar going upwards. Combining it with JPY. It doesn't mean that USD JPY is on the downside, so USD versus all other pairs or other pairs versus all versus USD would be you know, doing the same, reflecting it from USD. So USD JPY may be on the maybe weaker, USD weaker than the yen, but then other pairs may perform differently. Okay, so you would need to be very careful with that and see all pairs as having their own personality. Okay, now I see dominance on the downside. Of course, we've got daily, it's doing the same. If I zoom in, I can see that we've got dominance to the downside. All right, as you can see, when you go on to higher time frames, like now we're looking at a daily, and then we see this dominance of the bearish candle, then that gives us more strength to confirm that the dominance are by sellers as opposed to buyers. All right. Okay, there we go. Now, if we look at this point here, this could be an A, B, C, and D downwards as well, based on the 4-hour chart. So if I pull this one A to B, I see that This is quite a nice area that the C has landed at 61.8 and 70.7. Okay, so in between the two lines. So what I'll do next is I'll use the daily chart as well to create an ABCD pattern. So I've got A to B there, and then I'll pull that number. So that's another area potentially for prices to reach, if at all it has gone past these four lines, go under 101.40 and lower, then you've got chances of it reaching the 123 area. But let's use some Fibonacci, pull the B to C and look for 1.618. Okay, and that's another area here, and then we've got 141 as well, because prices at the C point were between the candles were between the 70.7 and the 61.8, so that gives us these areas here as another area to the long term that prices could potentially go to. Okay, so if I take that away, let's look at this. Okay, if I take that away, and it's on the, and based on the daily chart or the long-term sort of chart, I could easily draw that all the way up here. Okay, still redraw the ABCD pattern. Okay, but the thing I would like to show you is that there is a potential M-like pattern forming on the daily chart. Okay, so you want to be very careful with that. There we go. Okay, so here you go. What does that mean? That means because it's an M pattern, this is a bullish pattern. So once prices goes to this level here, there are a possibility of prices bouncing up at this end of this pattern. So that pattern, that's your X here, then you've got A, then you've got B, and you've got C. Okay, so if at all you want to convert that into a geometric pattern, you just do a cross this way, right? This is the USD JPY on the daily chart, guys, okay? And I attach all lines here, okay, so that it looks a little bit more kite-like, a kite-like pattern, but it's quite geometric in a way. It's you know, it's a sort of trapezium as well. Sorry, sort of a four-angle type geometric shape. But we want to look at this cross here. The cross is basically, under this cross would actually give you opportunities for a downside move or entry point. So anywhere under the 10227, ideally you want to adjust the 102.27 and adjust it based on psychological levels before you make your entries. Okay, so that's basically it. Now this is USD JPY on the daily chart, so I showed you on the lower time frames as well. So this is what's going on, and I've given you the bigger picture as well for the USD JPY. Hope that's clear for you guys on the USD JPY. Okay, now we've done the USD JPY, we've done the Euro USD. Okay, now let's move on to GBP USD. Okay, I've sent you guys for GBP USD. I know I've mentioned about some move to the downside before it makes a retreat to the upside. Okay, it has already done so. It has actually moved as what we have shared on Telegram as well, but I want to draw out what I see or what I've seen. Okay, the patterns that I've seen. Now, as mentioned on Telegram and WhatsApp group, for those who have got no WhatsApp group and Telegram, I'll send that out by email. If you want to send me an email at kenny@allbacks.com, and I'll be able to invite you onto. Just give me the number as well, or I'll give you a link in reply to your email, and you can then join me on Telegram group as well as WhatsApp group. Okay, we share ideas, trade ideas as well there. All right, so let's look at the 4-hour chart here, because that's what I look at a clearer pattern on the 4-hour chart. So here, what I see is a sort of sharp-like pattern. We call it the sharp-like pattern. It's a form of harmonic pattern. Now this one here, you've got this way here. Now it looks like the mouth of a shark that has just, come out of the water. So let's say that's the water area here. Okay, let's say there, right? And then you extend that here. So what that means is if that is the base of the water, okay, from where the face of the shark has popped out from, then this is the area that we expect more price falling to the base of the water area. Okay, if I put the eye of the shark here, it gives you a better picture. Okay, so that's your shark pattern. Okay, so this is a sort of, we call it a bullish type shark pattern. Why? Because at the end of it reaching here, we expect once it reaches here, then there is a potential to the upside. Now prices, as you see, hasn't really reached this level. So I'm looking at a potential gap here. Okay, this gap here as some potential for it to fall, for prices to fall towards 2. Okay, so now of course it's on the upside. Okay, it's on the upside, and look at the price there. It's on the upside, but prices are at the price is at the 1.3082. Now 82 is too close to the 80s like number, meaning it could rebound very easily close to the 80 level. If you would like to know whether or not prices will go up much further, then wait till prices go above the 80, at least 90, to show more strength from the buyers. Okay, if not, then the sellers will overtake again. The reason for that, the reason why I feel this could be there is still some gap for it to fall is because look at the correction itself. Now correction is weakening as far as I can see. Before that, I could see that the dominance were loads and loads of sellers have actually pushed prices down to this area. Then we've got some corrective move. Now, as the price goes up for GBP USD on the 4-hour chart, now the thing is that as it goes up, you need to look left. Where in the past has prices found resistance? Has prices found resistance in the past? This is support. Okay, this is some support here, some resistance here, but here you've got resistance, and here you've got resistance. Okay, so then what you need to do is look further to the left, and look for more resistance potentially. Okay, any more resistance close to the price now. Okay, let's see. It's probably best if I draw a line. Let's see. Let's base on that one here. You've got resistance here, correct? So we could always draw a zone first before we. There you go. Based on that candle and the longest wick that you can see is there. That's your resistance zone. Okay. Now that resistance zone that we draw now, okay, we'll keep it simple, is proving to be quite significant because you've got support, you've got very nice support here, you've got long candles piercing through it as well. So that's nice. Now, based on this support resistance zone and the sharp pattern that I've just drawn, for prices to show more upward strength, it needs to go above 1.3094, as you can see. Okay, now the problem with that is that even though it pierces through, you have got some challenges across. What is the challenge? It is the 3100 psychological area. Okay, so once it does, let's say if it does, pierces through 1.3094, wait. Do not enter your trade because it's not really a good idea. Why? It's highly risky only because you've got a resistance level. You've got a psychological level at 1.3100. Wait till it goes, whether or not it goes past or through 1.3100, like 3110, then you've got more strength, more thoughts to consider the upward. Okay, but I look at the possibility of it to be a little slim to go all the way up there because we just perhaps the shark has not eaten its pips yet. Okay, the shark pattern is not complete. It might be looking for more. Now it's rebounding, and the more it rebounds and to this area here and then makes a turnaround, the higher the possibility for it to reach this zone where the water base is. Okay, the water base is at this area here roughly. Okay, and that's 1.2872. Now 1.2872 is very close to the 1.2880 area, so you could always mark the 1.2880 area, okay, 1.2880 area as your area to watch out for prices to come down and bounce out from. Okay, so that is what's going on at the moment, guys, for the GBP USD 4-hour chart. Let's look at what's going on in the shorter time frame so that we know what to do as of now. Okay, so let's just do that. Okay, so you know the sharp pattern, you know how it looks like. Now the thing about the sharp pattern as well is the sharp pattern is usually connected to the Z pattern, right? So the Z pattern is what will drive prices up. Okay, so that's the Z pattern. But the Z pattern, the other thing about the Z pattern is, oh, let me just erase that first. Okay, other thing about the Z pattern is usually that big move down, okay, would be roughly in similar length with that move. So again, it might be confirming to more move down to that level at 937 as well. So let's look at it. Let's look at whether it pierces through or not. Okay, if it does pierce through, let's say to a significant level, okay, let's say it pierces through, you need to wait till it pierces through at some height, at least about here roughly. Okay, I'll tell you why. Then you can regard that as an ABCD pattern. Okay, so still somehow it would create more opportunities of patterns. Okay, from the sharp to the Z pattern to this ABCD, potentially they all sort of sum up, giving me hints that a downside move is more likely than a total reversal going up. So total reversal going up is a little bit less likely compared to a downward move. Okay, I hope that's clear for you guys. All right, so let me erase all that first. Give me a second. Okay, let me get a drink of water too. This second. Okay, so we're on the 4-hour chart. Let's look at what's going on the 1-hour chart. Okay, 1-hour chart is usually regarded as a neutral type of time frame. You see, it's still in between. It's still in between 1.3078 and 1.3094. Okay, now if I pull a Fibonacci from this angle here, let's say, okay, because I've got a rejection candle there, I like pulling it from there, and then I pull it all the way down. You could see you've got this area here, 38.2, as a significant area to watch out for too, right? Now, if I use this area here, I've got that area, see the green line? It's sort of on the dot of the 38.2 as well. So you see, this gives me a reason to believe that, well, more reasons to believe that it would anytime find a rebound. It will probably reverse anytime soon. Okay, we've got price action to prove that. We've got patterns to prove that. You've got the levels Fibonacci to prove that. So quite a number of things. So let's look at how strong this upward candle goes. And before anything else, let's go on to the 5-minute chart. Looking at the 5-minute chart. Oops. Okay. There we go. It is indeed on the upside, but again, really close to that level there. So let's see what happens once it reaches that level there. Would it actually create a pierce through that and then really go up high, or will it find some resistance and start to weaken and come back down? Okay. All right. So that's basically it. I've gone through the very short time frame, medium, as well as the long term time frame. Okay, for the GBP USD. Hope it's clear. I think you guys must have liked the nice drawing of the chart there, the chart pattern. Okay, it gives you an idea of what's going on with the GBP USD at the moment based on patterns and technical analysis. Okay, all right. Now we've done the GBP USD. Let's go to the USD CAD, guys. Okay, USD CAD. Okay, CAD, a pair that may be connected with what's going on with oil prices. It's correlated positively. Okay, we go on to the 1 hour chart for the oil. Just at a glance, just look at what's going on. I know there's some production, some supply issues as well. Maybe pulling prices down. Some things in the news today talking about more expectation on price falling for the oil as well. So let's look at what we can see. Now, I like to go onto the 4 hour chart for the oil at the moment. I've got more data on the 4 hour as opposed to the 1 hour, but most importantly, I see a pattern brewing. I see a potential ABCD combined with an M-like pattern. Can you guys spot that? Okay, for oil. All right. So if that is going down on the 4 hour chart, then it should be going down for the CAD too. Okay, roughly. We don't want to make that 100% sort of connection, but let's look at oil just for the sake of practice on the pattern side of things. Let's start with an A and a B. Okay. And AB, let's say, equals CD, roughly there. All right. So we are projecting a potential move to the downside to this area here. Okay, but let me complete the ABCD first. We got A to B. There you go. Right. AB equals CD. Right. Okay. Wait a second. So we've got B to C right there. Okay, and that's your AB equals CD. Now let's use a bit of Fibonacci. Okay, you pull the A to B and look at where the C point has landed, close to 70.7, so that's good. 70.7 will give you the 114 as your area that you can project to. So let's pull that one all the way down there, all the way up there, and look at 141 as another potential area that price could fall down to. Okay, so I'll get rid of that line, get rid of the Fibonacci. Let's get rid of these lines here, all these great lines as well. Okay, so this is what's going on with the the oil, okay, and which would relate to the movement for the Canadian dollar, okay, because they're positively connected. Now, let's see ABCD. ABCD is attached to this big move upward move that could potentially be your X to A move for an M pattern. Okay, so they are potential. Now look at this. You project the ABCD around this area. Okay, but look to the left. It's definitely an area that it found support there. So that's quite a good sign actually, because the M pattern, once it ends, it's supposed to go up here anyway, right? So that's basically it. So I'm looking at a potential for prices to fall to the 41.53 area, so that perhaps this is the plan by the big boys or people in the Arabic world as well, especially Saudi Arabia, where they can actually make the oil cheaper for some time before the end of the year, before winters and all that, so that they can actually do their magic here, so people could actually buy low and then sell high later on. Who knows, right? But technically, based on the pattern, I see a potential for prices to go. It's already under the 50 anyway, so it's at 0.20. So let's wait until it goes at 0.15 or 0.10. Then there are more possibility for it to reach the 45, 50 area again, this area here. Okay, but once it reaches this area, there are possibility for it to find some upper movement. Now the upper movement will be about 50% of this move here. Let's say it reaches there. Okay, if it reaches there, once it goes up to, it would go up to this area here, and that would be at the 44.67 area. Again, it's there, but we don't know what would happen then, whether it would reach that 50 area again. We don't know. It depends on what's going on geopolitically and politically, as well as economically. Not so much. It's more politically driven for the price of oil. Okay. All right, so that's basically on the oil. I just want to cover that so that you know that this is the pattern that I've seen that would be connected to the CAD. Okay, but let's look at USD CAD. What's going on with USD CAD? Okay, let me just clear off everything here and similarly clear off all the tools that we can see there. All right, now we're on USD CAD on the 1 hour chart first. Let's look at what's going on. Okay, so USD CAD with oil, it would probably be negatively correlated. Why? Because CAD would look the same, right? So we're looking at CAD potentially, let's say based on the 4 hour chart, it should actually be giving room to the downside too, because we looked at oil at the 4 hour chart, but now we're looking at USD CAD, so it should be negatively correlated. So we should be expecting upward move for the USD CAD. Now we are looking at some support level here, price wise 1.3158. Now 58 is close to the 50 side number. It would need to go above 60 and above and then give us more hint to the upside, but it has actually sort of progressively increased from 3150 area, giving a sign of a bit of a upward biasness, okay, for the USD versus the CAD. So USD CAD, you just zoom in a little bit, we are looking at prices finding support. We have seen it found support here at this level at the 100 exponential moving average, but we need more power, more momentum upwards, and it's only best if we want to look at more confirmation to the upside only after prices have gone above this 50 second number and above, because now it's in between lines, and I don't like looking at prices when they are trading, or candles are trading in between the lines, not way above the 3 lines or way under, but in between means uncertainty, meaning that anything could happen and you don't want to be caught there. All right, now the other thing that you could see roughly as a potential is that you got prices moving down, 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 and then found correction. It found correction at the 50 moving average and on the dot of the 38.2. Now this gives us a bit of a sign that it might find more power to the downside based on the 1 hour chart here, maybe as a correction, who knows, right? But you want to be very careful, okay? You can find, of course, ABCD here, but convert that into a geometric pattern so that you know the ideal entry area for yourself as a trader, as opposed to just blindly look at it and what do you call that, trade straight away. Because the problem here is that, like I've mentioned, you've got candles in between the 3 lines. This is uncertainty. When the market is in doubt, when you are in doubt because of the market, you should stay out, okay? But once you've changed it or convert this ABCD into a geometric pattern, then you have got a cross line here. Okay, so I'll just zoom in a little bit. So that cross line gives you an indication of where you should be. You should start looking into shorting only under 3159. Now again, you as a trader need to take lots of responsibility in adjusting that price to a psychological level. So that should be under 3150, better still 10 pips under the 3150 area to consider your actions, okay, as a trader. All right, so that's basically it. Now that's based on the 1 hour chart, okay. Uncertainty on the 1 hour chart, what's happening at the 5 minutes chart as of now for the USD CAD. We are looking at prices finding a rebound, but I don't like the way the 3 moving averages are trading. They're all sideways, giving, you know, they're touching each other as well, and they're entangled, not giving us clear sign. So that's not a good sign for the 5 minutes, not a good sign for the 1 hour, okay, at the moment, because they're in between the lines again, between the 50 and the 100. So let's look at 4 hour, okay, 4 hour chart. Let's look at what's going on. Now here we have got to the upside. So we've got medium term for the USD CAD upside kind of move, okay. Now let's look at what's going on here. Now here on the 4 hour chart, it's a little clearer. We've got 3 lines pointing upwards on the longer term, on the medium term, sorry. We've got prices above all lines here, okay. But here, this is where I would like to share something with you guys. I think we've got a sort of let me see, a Z-like pattern brewing here with potential to the downside for now. Let me just confirm at my end based on Fibonacci, and then I'll draw a pattern for you guys. Okay, it doesn't look too bad of a Z-like pattern, but starts from here at the A to B. Okay, now AB could potentially be equal to CD. So if at all you've got more downside move or pressure for the dollar versus the CAD, then we find potential to the downside here. But usually the Z-like pattern could also end, the C to D could end at the 50 area, which is here. Okay, so you would need to first wait for it to happen. I mean, for prices to go under the 50 to confirm downside bias. If not, it's going to be very risky for you. Okay, that is how the Z pattern looks like, but the C to D is just far too long. That's why I'm not sure whether it is a, I wouldn't say not sure, I wouldn't see it as a too high a probability type Z pattern. Okay, but just to be aware that there is a chance at all for it based on this pattern for it to fall, but you would need to monitor price first. Okay, it's probably best for us to look at what happens at this level here, 3134 and under. Why this level? This is where significant fall has actually happened. That's your support, that's your resistance, turn into support here, which is quite nice to consider. So under the 3134, better still under the 3120, and then look at what's going on. Okay, and see this end as well, 3140. But seem to be something that may make price fall. We just don't know what it is, but based on pattern, we never know. Okay, this pattern trading based on geometric pattern or harmonic type pattern trading, usually it's an early warning sign for you to be aware of something that might actually push price up or pull price down that we may expect for it to happen, but we just need to be aware. But in this case, for a Z pattern, it's not really a very nice Z-like pattern. It's a pattern that potentially could work still, so it's giving us a bit of a warning sign not to just feel that the USD versus the CAD would just jump up so much. There's some strength, apparently some building strength by the sellers, so you need to watch out. Watch out what? Watch out the price. Watch out prices. Be careful with your levels as well. Okay, so under the 3134 would be a safer zone for you to monitor and look at whether or not the bears have taken over. Under 3120, in my personal opinion, would be a better level. Okay, be conservative but safer level to then consider your action based on the trend, based on the strength of that particular trend at that time. So under 3134 and below will probably be a better time or period for you to understand what exactly the trend would be. Okay, so that's basically it for the USD CAD. That's USD CAD, but I want to just go on to the daily chart as well and try to get rid of all that, clear it out again so that we get a better idea. Okay, so we have got all that there. Now zoom out a little bit. Okay, look at what's going on here. All right, now on the daily chart, now if we regard this as the pole, which is not a very nice sort of pole for a pole and flag pattern, if it's a pole flag pattern, it would then still signal downward sort of move. But we've got a bit of a, even on the daily chart, you see for the long term, you do have some upward type strength, but not really that strong. This is the problem with the USD CAD. I mean, a lot of traders are, thinking about the USD and the USD strength, and then presidential election coming. So why and also oil, to the perhaps downside. So we should look into CAD downside and then US dollar upside. But what's going on technically? It's just warning us not to get too excited too early for a buy for the USD versus the CAD. There may be signs that it's telling you that the market prefers a downside move for the USD versus the CAD, but we just need to trade in stages carefully, and so that we can, measure our risk and the probability. Okay, as you can see, the USD CAD on the 5 minutes chart, it is, has crossed all three moving averages. But then here, even on the 5-minute chart, the three lines are horizontal. They're not separated from one another and pointing up. Okay, so there is a bit of a trick there going on. So here we do have resistance here, okay, and that zone there, okay. There you go. Between 1.3180 and 3185. These two lines I've drawn based on this zone here is just simply too strong because they are based on site numbers as well. Okay, and this is hence why this is happening. Look, it's just happening now. Okay, falling down. So let's look at where has this putting Fibonacci, where did it stop? Look at it. Stopped exactly, reversed exactly at 78.6. So again, this is giving me signs that the bears are ruling the game, even in the short term as well as the long term. But it's just clearer from the short term right up to the 1 hour and 4 hour. Daily may not be as clear, but these three time frames, 5 minutes, even the 15 minutes, the 1 hour and the 4 hour, is giving us some warning sign not to be too excited to buy the US dollar versus the CAD. You may have to look at lots of risk areas, whether or not if you are looking upwards for prices to go up, look left as well. Look at whether you find any resistance level, significant resistance level, and mark those area and trade in stages. Trade in stages meaning look at lower time frames, trade small, pips between 20, 30 pips or so, and look at those opportunities and build that up as opposed to, just open a trade and wait for things to go. I mean, it wouldn't fit a long-term trade for the USD CAD. It would probably fit a shorter time frame trade, because if things are not clear from the trend angle or trend perspective on the longer term, then why would you want to trade long-term? Okay, only if the long-term trend and all time frames are giving you a clear-cut trend direction, then you are by all means, good to consider long-term trades. If not, trade by stages, short-term trades first, little pips, and build that up. Okay, that's just my 2 cents on it. Okay, so yeah, we've got that going on at the moment. As you can see, USD CAD moving live. That's basically it. My take on the USD CAD, guys. Okay, so we've done most of the pairs. We are left with NZD, USD, GBP, JPY, and GBP CHF. So let's just get a crack on the NZD USD at the moment, and let's see what's going on. Give me a second. I don't see it here, so NZD USD as usual. Okay. NZD USD on the 1 hour chart. Ooh, what is going on? Fundamentals. I mean, are we still looking at property? Yes, we are. We're still in the bubble. And for those guys who missed a Friday session, I mean, I'll be writing an article on bubbles as well very soon. Property bubble is still going on. The bubble is getting bigger. When the little needle is going to prick it, that's timing of it bursting, and that's what we don't really know as yet. Okay, so that's what's going on in New Zealand at the moment. We've got the property bubble going on. Now let's look at the 1 hour chart for the NZD. We've got prices at 7324 now, 7324 or 7325, 25, last 2 digits, too close to the 20 site number. Okay, now that means anytime it could reverse, or it could pierce through and go up to 7330 and give you more strength to the upside. But one to keep aware at is the 7320 area as your psychological number, but I'll just mark that first. Okay, I'll mark the psychological level based on psychological numbers. 7320, 7320. Okay, now that is what's marked. Okay, now once I've marked that, I want you to look left. Look to your left. Look at whether or not at that area you've got resistance. Okay, now, oops. Right, see, there we go. We do have resistance, dotted around that area. We've got one right on the dot there, almost there. Okay, we've got wicks there happening. So yes, it's quite a it's quite a significant area based on the psychological numbers, of course. But let's do a zone. Okay, let's look at what's going on. Let's look at significant drop of price close to that area. We've got one here. We've got that area here. Okay. Now this one is based on quite a long wick up there. So I'll take that off and consider other resistance zone that's close to it. Let's just see. What I'm doing now is I would like to draw a support resistance zone, but let's go onto the 4-hour chart. Okay, let's go on 4-hour chart. Let's do this one here, perhaps this one here. Okay, you've got one here which is, I wouldn't say that significant, but it's closer to the price now, and that would then cap the price. Let's see, this one here and this one here. Okay, there we go. So we have got this anywhere between 7315, which is very close to the 7320 site number, and 7332. Okay, not very close to any site number as yet. Okay, 7331. Okay, there we go. So this area here, let's just evaluate that zone that I've just drawn based on these 3 horizontal green line. Okay, green lines. And if we go on, we could see, okay, got resistance there. Yes, you've got not that tightly actually. Second, let's just, yes, we do have some significant drop of price. Look at that. That's just there, and lots of drop, a huge drop of price there. Okay, so this is quite a significant resistance zone that we've just drawn. Okay, let's just rewind or look back a little bit, see what's going on previously. Okay, let's see. Any more areas to look out for? I don't really see that coming very soon. Yes, we do have some resistance here, and again, drop of prices, huge drop of prices, some support area here, price bounced off, but then got pulled down again, and then on it went on for a longer and bigger price fall. Okay, so I do see more signs of it being a resistant area. We do have some support here, some support here, but oh, that's not too bad there. Price rise, okay, but it doesn't matter whether it's more support or more resistant, but because sometimes it's not that easy for us to just look at that. But here I do see, you know, these 3 lines here would be your mark to know whether or not prices would create a trend for you. If it's right above there, then you've got it making that area or zone as your significant support, and up it goes. If not, it bounces from there and downwards. Now, if it does come down or under 7315 and under, it poses more challenges to go down for the NZD USD. Why? Because you've got the 50, the 100, and the 200 average as well. Okay, where you could find support. If it's on the way down, you might find support at this area, and it has to go through these 3 lines as layers that it needs to, layers of resistance for it to actually, you know, pierce through each one of them and then find a lot of strength to come downwards. Okay, but I would like to see whether or not I've got a Z-like pattern going on here. Let me just do a bit of criteria check based on the Fibonacci. It's looking good so far. Let's just do another check here. Let's see. Okay, doing not too bad. Let's see. A second. I'll just draw out the Z pattern for you in a bit. Okay, not too bad at all. Okay, so let's just zoom in a little bit. Now here, if I zoom in, it's probably easier for you to take a look at it now. So I'll just draw out that Z pattern. Okay, now A to B. Okay, oops, let's just tidy up a little bit there. Second, and I transfer that down here. Okay, there we go. This is a sort of bullish type pattern. Okay, now that is giving me some hints that if at all it goes under 7315 or 7310 and below, then we've got high chances of it trying to pierce through that 200. If it does pierce through that 200, then you have got the 200 EMA, the moving average. If it does pierce through that and you've got more strength to the downside, then we're looking at a possibility of prices reaching this area here. Okay, so in blue, I'm drawing out the Z-like, probable Z-like pattern. So prices will, make that resistance call there and then head downward. So what is going on with the bubble? We don't know. Has it burst? Maybe not, but it's probably finding a bit of resistance before it go up again. This is a bullish pattern anyway. So up, down this way, A to B, B to C goes up, C to D downwards, and once it reaches D area here, it might just go up. But we need to also use the Fibonacci at the 50% level for the Z-like pattern, meaning you pull it from B to C. The D could also potentially bounce up, reaches the 50 area and bounce upwards from the 50 area, which is 7 to 21, another area to look up for prices to go down to before you. Okay, so be careful with this. It's not really a good zone to look at trading for NZD USD. It's probably best for us to look at it going above this area or under this area and showing more momentum. It's just that to be a conservative trader, or if you are a conservative trader, it's probably best to look into trading only after it's trading to the downside after it has pierced through the 200 average. If not, to the upside above the 7331 area, as you can see marked by this horizontal green line. If not, look at 7360 area, which is above 10 pips above the 7350 psychological level. Okay, so let's look at what's going on now for the NZD USD. Right? So, okay, now maybe a cup-like pattern, I'm not sure. I don't see it as a very clear cup handle pattern, so I'm not going to go into that as yet. Let's see, 5 minutes chart, only if we zoom in a little bit. Now, zoom in, look at the strength. Strength to the downside at the moment. We've got prices rejecting that area there on the 5 minutes chart, and if you look left, it's sort of mirror areas that sort of falling through. So resistance, so we're looking at strength to the downside, but we just need prices to go under the 7320 by 10 pips, like 7310 and below, to give us a bit of an idea. Now the thing is that it went down to the 7317 area, but not quite below that, so we just need to monitor at first. Okay, now what's going on? Let's just see whether I find any other patterns here. That's not very clear Z-like pattern here, but we probably have got something here. Let's see. Yeah, right, there you go. Based on another Z pattern on the 5 minute chart, we have potential. Again, it's marking a downward momentum at 7307. Let's wait for this one. This is a bit tricky. It's finding support at these levels, and it is maybe this is just a correction, but we don't want to be based on just maybes. We want prices to go under, whether or not it goes under the second numbers and then bounce off. And once it bounces off 7325, 7330 and above, then we know that that's where it found support and starts to go up more for the NZD-USD. Okay, on the 1 hour chart, we've got a resistance area here, as you can see. You need to mark that as a zone. So again, it found resistance before that major resistance here. So that is a sign that bears want to take the price lower faster than it should. Okay, this is what's going on for the NZD USD, guys. Okay, so pattern-wise, no clear pattern that I could see that would be worth marking it on because of the how do you call that, probability of the pattern as well, because this is just not really ideal to just guess, but here if you pull this one here, you do have a level here, 78.6, between 78.6 or 88.6, so we've got a level there, but I'm just not very keen into the into the trade for the NZE, maybe because of pattern-wise it's not that clear as opposed to the other patterns. The other patterns have got, the other pairs have got better, clearer pattern to look out for. Okay, especially the trend direction as well. Here on the 1 hour itself, as you can see, the 3 moving averages are traveling horizontally, and that's not really a good sign for me. Okay, that gives me an idea that I should look elsewhere first before I come back to the NZE. Okay, guys. Also, you want to look into volatility. Look at the pairs that we've mentioned earlier on, GBP, for example, CHF, maybe AUD a little bit, but not so much. But GBP, CHF, USD, Euro, these are high volatility pairs for the week. So perhaps that's the reason why NZE salary things are weakening down or not giving you very clear direction for that. And also the volatility is not as high as the other pairs. Okay, so we've covered that NZE USD. Now we've got 2 pairs left, GBP JPY and GBP CHF. Okay, and then we need to wrap up after that. Okay, so we're looking at GBP JPY, US JPY here, GBP JPY. Let's look at what's going on here. It's nice pattern there. Previously, you've got a sort of M-like pattern, but it went lower and then it made the D to E up there. But let's forget about that one. That's previous pattern. So let's look at what's going on. Do that now. Looking at GBP JPY, let's look at trends first based on 1 hour chart. And we've got GBP, okay, versus JPY. It is definitely giving more hints to the downside, quite strongly tight trend. Now here is where we sort of notice, if you guys could notice that too, we've got the 3 moving averages traveling at quite a nice angle downwards. As you can see, the 3 lines are wide apart, okay, and you've got candles way under all 3 lines. Good sign to show you that it's on a downward bias or downward trend, okay. And if we go into the 4 hour chart, the same, very far away from all 3 lines. The only thing is the 3 lines are not far apart, not into a nice angle. Okay, so we look into the daily chart, and daily chart long term is looking really nice to the downside. So it's just that the medium term is a little bit not that clear as opposed to the 1 hour chart and the daily chart. Daily chart is quite clear to the downside, it's giving us a lot of momentum to the downside. So for the long term, I think we see more move and room to the downside for the GBP JPY daily chart. Okay, so this is basically it. Now we've got more room to the downside. You could easily look into GBP daily chart. Before I move to the shorter term, I just want to point out something here. Let me just reduce the size bit here. Zoom in a little bit. Okay, there you go. You've got prices concentrated there. I mean, found a rebound from that angle there, came down, okay, and started that as well. So here we could have a mini ABCD type pattern from there right down here, because prices have actually rebounded from the 61.8 level, which is quite a nice level, or 70.7. Give me a second. Yeah, 70.7 area. Okay, so that gives us a potential downward move. You can regard that as an ABCD pattern. Okay, and use your Fibonacci and look at where C has done, and you can convert that ABCD into a geometric pattern and start looking at a cross point, like I've showed you, to look into ideal entry areas, but you do need to adjust that using your psychological numbers. Okay, go on to the 5-minute chart for the GBP JPY. Let us just okay, so got a 5-minute chart. What's going on in the 5-minute chart? Now, 5-minute chart itself is looking at a lot of rebound. Okay, prices went down, it found a bit of correction up there, but then reversed twice on the 200 moving average, giving you loads of sign to the downside for the 5-minute chart as well for the short term. So what you can actually then do is find short, very short term ABCD type opportunity. You've got A here, B here, C, and then let's look at whether or not it reaches the target that we wanted to reach. So A to B, C is at very close to the 61.8, which is a good sign. All right, so let's draw out the pattern first. Let's go on to A. Okay, B, right? So then we've got B, and then you've got C right up there, correct? Right, now we've got, there you go, AB equals CD, right? I will then draw that all the way down here. Okay, so zoom out a little bit, reduce the size a little bit. Okay. So AB equals CD gives us an area that prices could potentially reach there, right? 132.67. Now we find another, the potential B to C. Oops, sorry about that. B to C, B all the way up to C, and look for the 1.618. Okay. Right, so these are potential areas to look out for. If at all we find biasness to the downside or downtrend, and it's strong enough, it would reach most probably to the 132.68 area or the 13267 as marked by the green lines. Okay. Now, ideal entry point should only be done once you have converted this ABCD pattern into a geometric pattern here, and then we have got center point here, marking it at 132.89. So there itself is not a good place or good point to short it, because it's just too close to the psychological level of 89, or sorry, of 80. So it should be under 80. Okay, 132.70 should be an ideal area, so you would need for prices to go under 80 first, reaches 70, and then you could look into your ideal shorting area once it reaches that area. If not, it's not safe. It's probably risky to do that. Okay. All right, so that's basically based on a GBP/JPY 5-minute chart, guys, and 1 hour chart. Just very quickly, it's on the downwards. Biasness is really strong to the downside. So whether or not it would rebound to the upside, yes, potentially for the GBP/JPY, only because if you look left, there's a very big area to look out for here. Okay, so if I take that and that away, right, you would need to look into support zone. Okay, and if you do that, there you go, support zone there. See, prices there, prices coming downwards. Okay, but you're looking at a 1 hour chart. You need to draw out that and look at the longest wick that you can see right there. If at all, I would like to base on that one here, then I will use that wick there. Okay, and get that off, and we go on here and zoom in a little bit. So the area of 132.48, which is very close to 0.50, and the 132.34 is to look out for as a potential reversal. So let's say you are selling, so be careful that the way down towards the 40-50 area is a very significant support area, because that was the area where the market has driven price all the way up to that area there. Okay, so that's a huge move. So be careful. We've got sort of like a cup-like pattern going on, an upside down cup-like pattern. So that would actually come down to this area here. Maybe it's an end of a cycle here. This area we need to watch out for that area, GBP/JPY. Okay, if you're on sell, look at that. It may be a good potential buying zone for you to look into the buying side of things once it reaches that area. Okay, hope that is clear for your GBP/JPY, guys. Now go on to the last pair. Okay, go on to the last pair for GBP/CHF, and then we shall wrap up the market. Of course, I'll get your questions first. So GBP/CHF, that is, say GBP/CHF. Okay, let's look at what's going on. Now, GBP CHF on the 1 hour chart. Okay, it's looking like it's got some potential to the downside since it's showing some strength to the downside. But again, look left because we have got some significant support area going on here. So be very careful. Prices are at 2795. 2795 is very close to the 00 cycle number. So only if it goes under the 90 and below, better still to 780 and below, only then it'll give you some more selling opportunities to the downside for the GBP CHF, but it's probably best for us to look into the zones. Second. Okay, let's see. Okay, you've got some support zone going on here, guys, so be very, very careful. Lots of significant zone going on here. So between 1.27, 1.2795 to 2788. That's basically an area to watch out for. So only if it goes under 2780 and below that you could look into more selling biasness. But GBP CHF on the 1 hour chart, watch out for a significant support zone because some of you guys might just based on pattern and based on pattern just based on this pattern here, like an A and a B and a C and D. Sorry about this Skype going on like crazy. Give me a second. Just sign up for one. Okay, so we have got A, B, C, D basically, and you would see this as okay, A and then B and C and O prices would actually go down much more, but you need to look at levels as well. So this level poses as a significant support area, so you need to watch out. So because of that, I wouldn't actually draw an ABCD straight away, even though we've got prices under the 3 lines or we're looking at longer pattern. But on a bigger picture, bigger scale, look at that. Price went up, come down, and come down to this area here, and this area here is filled with significant huge support areas, so you need to be careful with this, okay? Because prices went down and didn't go quite down, down further at this area, but then it bounced up because if you look left, you've got support here as well. So be very careful for that, for GBP CHF, especially in the 1 hour chart, okay? That's basically it. So I would say forget about the ABCD bearish pattern, if at all that is what you have drawn. Look out and wait for prices to bounce up first, because we have got a lot of support only if it does the bearish move under the 2780 area, and then it's really crossing, I would say go under the cross point of the ABCD, only then it would be ideal for us to look into a sell. But at this point, just monitor, do not do anything as yet, look at whether or not it bounces upwards, okay? 5 minute chart. Go into the 5 minute chart for the GBP CHF. So let's see, and let's see what's going on here. Now, same, it's on the downward move, but again, it may be entering that zone, okay, here, but look at how it found support there, and it's just struggling at the moment. But if it does come through, it might come through and just play around that 1.2788 area. But the problem is that you've got the price has got the 200 moving average to challenge. Okay, if it does win that line there and goes through it, pierces through it, then it's got the next challenge here as well. Okay, and basically it's playing close to the 2780 area as well. All right, so that's for the GBP CHF for the 4 minutes, for the 5 minutes chart, and the same goes there. But looking at the bigger picture, as I've mentioned earlier on, let's look at what it does with the support area here. Okay, and it looks like it could be possible for it to bounce up from there, because it's tricking everyone that is going strong on the downside, but it might just do the total opposite. Okay, so be very careful with that. And let's see if at all it does actually come down more. I see that this area here on the 50 It's quite significant as well. So I'll add up another line to that. That's 2784. So prices needs to go under 2784 to show more bearish. Okay guys, I hope that's clear for most of the pairs. We've covered close to 10 pairs altogether, and we've done most of it. So that's basically it. Now I would like to wrap up here, but just before I wrap it all up, any questions at all, guys? Anything that you guys would like to ask me? Anything at all? All right, we've got questions coming up. Okay, all right, good. So no questions, brilliant. Okay, hope that was all clear for you guys. FOMC, that's a very good question, but the answer to that is quite complicated, and it's not that clear cut. In my opinion, if you guys have noticed, I mean, there were weeks, there were alternate weeks in the news that one week they're talking about more possibility of a rate hike, and then no, a rate cut, and then a rate hike, and it sort of have a pattern. The last couple of weeks back, a pattern intermittently. It's like alternate week. That whole week is talking about positiveness. Rate hike, and then the other week no, and then rate week there. So I wonder whether this is a pattern that we can rely on. It's really difficult, but in terms of what's going on in the States, it's not really clear cut as what is in the media. What's in the media is positiveness. I feel that they might want to encourage positivity and to cover up a lot of negativity, real negative news in the States would be, they still have room to cover it up for now. So that would then drive prices upwards. Okay, so a rate hike may not be in September, but I think that it may be again soon, perhaps the next one. But even if it's neutral, okay, or not too negative, it may still drive it up. I mean, you guys have actually seen what happened with the NFP. Okay, total opposite. More and more manipulation of data, and what the banks are actually doing is just covering up their losses, doing all the things that would benefit them. So retail traders and the data are not in control. They cannot do anything at the moment. Okay, it's more of what you think the U.S. government, the Federal Reserve, and all that would like to cover, would like to repair. That is what's important. It doesn't actually even matter anymore with the data release and things like that, how much they would like to cover. If, for example, they need to cover up their mess with increasing rates, then they will increase rate. Okay, it's more like covering up of the problems. So this is basically it, and as we know, they have to reduce rates and going towards reducing the value of currencies a lot more. So reduced currency meaning more pump up of prices, a pump up of liquidity into the system, much more. So that's basically it. I feel that it might go, it's between neutral to a rate hike, but I have no sense of saying exactly what they will do, because I just simply don't know, because they'll just repair their mess, and whatever mess that's coming up keeps on building up as well. So this is a very tough question. Okay, but what I would advise you guys is to trade in stages, find correlation, highly correlated pairs, and you can still take the opportunity. And you can always shy away from what is directly connected to the States and look into pairs that are highly volatile, and at the same time pairs that are highly correlated to that highly volatile pairs for the day, daily, and look into intraday trades as well. And that is how you could benefit and look at clear-cut patterns that would emerge, and then you are sure of the trend. And I think that would be a better approach to it, as opposed to finding pairs and looking at looking for confidence out of data releases like the FOMC and all that. It's just simply not as reliable anymore. I mean, in my humble opinion. Okay, so that's basically it. Okay, guys, I would like to wrap it up here. And if there's anything else, guys, feel free. You can email me at kenny@allbacks.com. Join me for the Wednesday session. I mean, I would like to see much more in the Wednesday session. I mean, more people in the Wednesday session because we want to talk a lot more about troubleshooting your existing trades, especially if you are already clients of Orbex and you're trading with us already. And I would like to be more of help dealing with your current trades and looking at how we can repair them, okay, and reach consistency, of course. Every traders would like to achieve that. Okay, brilliant. Thank you, Arabla, as well. Sorry. Thank you, Veronica, for your question. And we'll see you again on Wednesday. All right, guys. And I would like to wish you guys a pleasant evening. And thank you very much for attending today's webinar. All right. Take care, guys. And see you guys soon. Bye-bye.